Welcome to the Small Business Tax Savings Podcast, powered by Jetro. Each week, we bring extremely valuable accounting and tax tips specific to small business owners. You will be on your way to growing your business and putting more money in your pockets. Here's your host.
Hello and welcome back to another episode. Today we're continuing the retirement discussion. We're going to be talking about advanced retirement plan designs for high income earners. And we have special guest Matt Ruttenberg back again. Now, before we get into that, this episode is brought to you by Jetro, a digital accounting firm servicing business owners across the country, helping them relieve stress around financials and save thousands in taxes. I'm your host and founder of Jetro, Mike Jesowshek. Again, today we're continuing that topic on this series that we've been doing on retirement options. And this is sort of the placeholder at the end that we talk about and just want to kind of wrap up the series with this discussion. And today's topic is advanced retirement plan designs for high income earners. And we brought back Matt Ruttenberg again to discuss kind of these options with you guys. So Matt, welcome back to the show. I really appreciate you coming on for this series of episodes that we've been doing on retirement planning.
Thanks, Mike. I appreciate it. Thanks for having me back.
Yeah, so I know we were talking, and this was kind of something that I wanted to discuss. We have, our listeners range from people that are just starting out or maybe not even starting to people that have built, sold, or are, have a massively successful business. And so one of the things I wanted to talk about was for those high income earners, what options are there when it comes to retirement? And I know we kind of talked pre-show about some of the options that you've done that I thought were pretty creative. So if I'll just kind of let the door open for you here. So if we have an advanced kind of a high income earner, business owner, when it comes to retirement planning, what are some of those options that we can do to kind of maximize ability to put money into retirement over and above maybe what we can max out on a normal plan? And also provide some kind of massive tax savings along the way.
Yeah. It's a common question that we have with high income earners. We'll have a conversation where they'll come into it thinking a 401k plan is kind of the only solution. And when you're talking, maybe for someone who's earning $500,000 or more, if you're talking about a $19,500 maximum contribution rate in your 401k plan, it doesn't do much for them. There's other things that they think they can do that's available that they can maybe earn more or get a better interest rate based on what their tax savings is on $19,500 when you're looking at someone who earns that much money.
Yeah, that makes sense.
Yeah. So the next step in the conversation is kind of asking how much do you want to save? And traditionally, we're talking with these higher earners, attorneys, doctors, and folks like that. But more often than not, there's a lot of online business owners. There's a lot of other more non-traditional, I call them solopreneurs these days, that are earning quite a bit of money, even up into the millions sometimes, where they are looking for a serious tax savings option. Because sometimes, when you're making that much money, your tax bracket is quite high, as you know, Mike. And if you can save them, maybe up into 6 digits of taxes, that now we're talking there's a solution for them. The best way to explain this is kind of more, it's around the plan design. I always start the conversation with, imagining a 3-tiered wedding cake, where the smallest tier is on the top, largest on the bottom, and then flip it upside down. These are the different layers that you have when you're talking about a pre-tax options in your 401k plan. The smallest is the 401k, which is the bottom, which is the 401k plan itself, the $19,500. You can do this. This is generally considered employee contributions. So you pay yourself, and then you, as your own employee, are contributing into that plan up to the $19,500. Now we're talking the middle option, which is also considered the profit sharing sleeve, if you will, and that can get you up to $58,000 now. That is another level where even if you're not making $500,000 a year or more, that's considerable. Even if you're, $100,000 or $150,000, $200,000, that is something that is often overlooked when you're thinking of the term 401k plan. It's another layer on top of that 401k. And now for the real high income earner advanced option, as you put it earlier, is that third tier, the top tier, now the biggest tier. That is considered a cash balance plan. It's also a type of a defined benefit plan, also known as a pension plan. Now we're talking we can get folks up over $300,000 a year pre-tax, which, as you can imagine, it gets you well into the six digits of tax savings too, potentially.
Mm-hmm. Yeah. So the first level is kind of your 401k, which would be your $19,500. The second level is that profit sharing, which would be basically the kind of the employer match or whatever the company is providing to that kind of 401k plan. Yep. Or their contribution. And then this third level is this cash balance idea, where we can really kind of take, instead of looking at $50,000 to $60,000 in a maximum, now we're looking at $300,000 plus potential as a maximum.
Yeah, absolutely. And, just these are age banded. If you're looking, if you're an employer in the ballpark of 50 years old or so, you can save about $225,000 pre-tax. And if you're, that's around $100,000 of tax savings potentially. When you look at the numbers, absolutely.
So explain a little bit about this cash balance or this defined benefit plan. What does, is this something that you offer to all your employees as well? Is it something that is added onto the 401k, or is it completely separate? Can you do the cash balance defined benefit plan without the 401k? Kind of go into details about how that and just high level of how that kind of cash balance plays into the picture.
Absolutely. Yeah. So more often than not, a cash balance plan is layered on top of a solo 401k or an individual 401k. And there's different reasons for that. But the main one is because if you have employees, it can get kind of expensive. Now, we work with companies that have 20, 30 employees that are there in this cash balance plan, but the benefits are so great. The tax benefits are so large that, when you look at it from a net tax savings standpoint, they're ahead of the game, as opposed to having to pay the taxes without a cash balance plan. But more often than not, we're looking at like I said, a solopreneur, maybe with a spouse, one or two employees, and it tend to be older clients that are approaching retirement because they want to start, I call it shotgunning their retirement options because they've been investing so much money in their business. Now they want to start diversifying into their own retirement account, not just inside of their business. These tend to be, these are, when you look at just like the profit sharing and the defined benefit or the cash balance plan, these are all employer contributions. They are all the calculations are based on your compensation and how much you pay yourself, how much you pay your staff, how much you pay your spouse even. And every single plan is extremely individualized, meaning the way you pay your staff goes into the calculation, the age of your staff, your age goes into the calculation. So yes, the contribution limits are very large, but sometimes they can be limited based on the way your company is built. Okay,
that makes sense. Now, when we're looking at setting these up, I know you said there's a lot of flexibility into them. There's a lot of complexity to them. It changes plan by plan. Is there a certain level when you think it makes sense for someone to start thinking about this cash balance plan? Is there saying like, hey, we want to put X amount of money away into retirement. This is when we should start looking at this plan versus just kind of sticking with solo 401k or something like that?
Yeah. I think the best way to answer that is you got to really look at what your goals are and where you are with your company. A relatively new company is going to be trying to reinvest more of their the income coming back into the company. Whereas someone who's more established and the company is an established company, that's when we start having these conversations. And it simply comes down to how much do you want to save? How much are you able to save for retirement? And yes, the tax conversation is most of the time the most important, because basically what we're doing is we're shifting money from one bucket to another in order to save this vast amount of taxes. But a lot of it has to, like we've talked about in previous episode, how much do you want to save, or how much can you save? Mm-hmm. And if it's more than $58,000, then we start talking about cash balance plan. Just because you are able to save $350,000 does not mean you have to. It just means that is on the table, just like any other retirement account that we've talked about in the past.
Yep, makes complete sense. Now, when we look at setting these up and the fees and the timeline to set these up, is this something that takes a while to kind of structure, get set up? Is it something that's extremely expensive on the front end? How does that typically look? And I know there's probably a lot of ways to do this, and so that probably determines a lot of those items. But what does that typically look like with these?
Yeah, so these are definitely more advanced options, as we've said a couple of times now, and they take a lot more planning from our end, from the accountant's end, and having conversations and seeing what can we do. It all starts with a census. A census is basically an outline of what your company looks like, how much you pay yourself, your employees, who's the ownership, age, things like that. These definitely tend to be more costly than a traditional 401k plan, and even with a profit sharing plan. Mm-hmm. There are actuaries involved that need to calculate these for the employer to make sure that on an annual basis, you are contributing and you are putting the same amount. Let me rephrase that. Let me take a step back. The actuaries are very important because they calculate how much you can put into your plan versus how much you can put into your employee's plan. Now, this isn't as simple as investing money into the stock market like you do with your 401k plan or your profit sharing plan. The way this works is you are actually, as the employer, are on the hook for the interest rate involved. This is a pension plan. Just like your standard maybe Ford employee in the past, where you end up having an income after you retire that pays you and your spouse until you pass away. This is the same type of plan, except there's a balance to it. And basically you and the actuary determine the amount of money that you want to earn on the money inside of the plan. And if the assets inside the plan don't earn that, then it's the employer's on the hook. Usually that's not the case, but it can be the case where that's where the actuary comes into play to make sure all those numbers line up for everybody. So they do tend to be more expensive because we're bringing in another party to calculate all that. Mm-hmm.
Yeah, no, we always talk about that when we look at tax planning. We have what we call baseline tax strategies. These are things that are easy to implement, quick to implement, relatively cheap because they're just kind of utilizing the tax code available. But anytime you go into that advanced arena, typically there's going to open up some more doors. There's going to be more complexity. There's going to be more work involved. And obviously that brings in an additional cost. Now, more often than not, the tax savings that comes with that advanced planning is incredible. And so it far outweighs any kind of additional cost you have. But that's something I always like to bring up. So I think this is great. For some listeners here, this might be something that you're like, yeah, I want to jump on this now, or this is something I want to do this year. Others, you might be just getting started, and that's okay too. This is not something that you need to be thinking about now, but I think that this is a good episode to listen to. And we say this with tax planning as well, is that there is options available at whatever level you're at. So if you haven't listened to our previous episodes about retirement options available, definitely check those out, because there is going to be an option for you, whether you're just getting started or whether you now have 40 employees and you're doing really well. There's an option for you, and there's a spectrum on what makes sense there. And Matt can help kind of walk you through that and go through those options with you. So I always say it's good to know that there's options out there. We always talk about this with advanced tax planning too. Once you hit certain amounts in income, reach out to us, because that opens the door to more strategies available that aren't available at lower income, simply because of sometimes the cost involved with them. It doesn't make sense. The savings would not outweigh the cost at a lower income level. And so it's always good to know that as you're growing your business, that there is options available when you hit certain thresholds. And I think that's where it's important for you that are just getting started. So, Matt, before we kind of wrap up this episode, any other thing else you want to talk about on kind of this high income earner and retirement options and available, options for them?
I think we covered a lot of it. These are very complex plans, but just having the conversation ahead of time, whether you're at, like you said earlier, whether you're at or just getting started, or if you don't think you're quite there yet, planning ahead is the biggest thing, because it gives you a goal to reach, and then having that knowledge behind you is great, because now you know what the next step is. So I think that was a great way to explain that.
Awesome. Well, yeah, Matt, I just want to thank you for taking the time. We've gone through a lot of different retirement options. This has been a part of a multi-part series. And so I know we've gone through a lot of different stuff, really kind of outlined what options are available to small businesses out there. And I think this has been extremely helpful. And as always, we'll have some of Matt, for you listeners, we'll have some of Matt's information in the show notes so you can check out, and even a website link that you can look to if you want to just kind of see what plan might be the best fit for you. So Matt, just thanks again. Thanks again for taking the time and really putting in a lot of effort and work into being able to provide content and everything else for these episodes.
Thank you very much, Mike. I really appreciate having the opportunity to explain the vast options out there to your listeners. So thanks again.
Awesome. Thanks everyone for listening to another episode, and I will see you guys next week. A couple last things before I go. One, don't forget to check out our Facebook group. Simply search in Facebook, Small Business Tax Secrets, and there's going to be a group there that you can join of small business owners just like you, collaborating, asking questions, and working together on this idea of bookkeeping and taxes. And second, I'm extremely excited that we're going to be launching 2 new programs. To get on our wait list and be an early adapter in this, go to www.jetrotax.com/launch. That's www.jetrotax.com/launch. On there, you're going to be able to join our wait list and be the first to know when we launch these 2 programs. There's 2 programs that we're launching. One is the tax minimization program and the stress-free bookkeeping training program. These programs are going to be game changers for small business owners, and I'm extremely excited to be able to launch them for you. In them, there's going to be a library of do-it-yourself bookkeeping videos and content. On the tax minimization program, we're going to have a library of tax strategies and implementation guides so you can implement and fully vet out and push out these tax strategies yourself. We're going to be doing training. We're going to be teaching you how to do this. They're going to have implementation guides. There's also going to be options to ask a pro, unlimited access to our team, a private Facebook group for members to collaborate together, monthly group training, discounted on services and partner services and things like that. So these programs, I'm extremely excited to roll out. I want you to be a part of it. And if you join our waitlist, you'll be the first one to know when we launch them. Again, it's www.jetrotax.com/launch. www.jetrotax.com/launch to join our waitlist to these new programs that we're going to be launching. Thanks again, and we'll talk soon.
This has been another episode of the Small Business Tax Savings Podcast from the team at Jetro. If you enjoy our weekly episodes, please leave a review on whatever platform you listen to us on and share with other business owners. If you have any questions or future topics you want to hear, email them to tax@jetrotax.com. Thanks for listening and have a great day.